Right now, let's talk charts with Dave Floyd, founder and president at the Aspen Trading Group. Dave, welcome back to the show. Last time you were here, you had a nice call on the dollar, saying that the bears were about to get a little bit of a wake up. They have, and then this week they showed up again and the dollar got hit. So what are you seeing in the chart right now? Do you think this is a buy the dip opportunity for the dollar? Are we in that type of a trend now?
Good question. First of all, thanks for having me back, Oliver. You know, these lows and highs, multi-year highs or multi-month lows and highs are always kind of tough to forecast. Sometimes you get a couple of tests. Obviously, the last forecast I had here was correct. We did rally in the dollar index. Euro moved lower. Dollar Swiss moved higher. Dollar yen moved higher. But it looks as though we're going to retest that. So at this point, I don't want to say neutral. I mean, I'm short the dollar, earlier this week by being short dollar Swiss, short dollar yen, and long the euro. But for me to go back and now completely be bearish on the dollar, that would be a kind of a tough stretch in here because we've been down for so long. This just might simply be a retest. So at this point, my forecast is literally out a few days, maybe a week, and I'll reevaluate just depending on how the price action unfolds.
Okay, so you got out of the dollar bull position on the run up then. That bounce, you think, was enough to kind of take some of the profits from that trade and wait until the setup becomes more clear?
Yeah, well, basically what I did was I flipped them around. Not immediately. I scaled out of the longs on the way up, and then as prices started to break down and look a little bit more impulsive from a technical perspective, it seemed like a good idea to maybe nibble on the short side, and that's what I've done, and I'm short now. Now, I only got short earlier this week, but that was the right call to do.
Okay, and I see in your notes you described the dollar rally as having failed. Dave, I know that you look at the charts very kind of first and foremost, but I wonder the fundamental aspect as well and the way the dollar has moved around stimulus information. Do you think that'll be an interesting and important test to see how the dollar responds once we actually get some policy signed? I mean, it seems like that's been so crucial to the dollar narrative that we got to find out if we sell the news on that or if that's like a new leg for dollar weakness. What do you think?
Yeah, a little bit out of my, day-to-day pay grade, so to speak. But I mean, obviously that has been the trend, as you noted. The bond market's actually quite interesting in here. That might provide a little bit more of a cue. We've got rates moving up.
Tell me what you see in bonds.
I'm sorry, what was that, Oliver?
Tell me what you see in bonds.
Well, right now it looks like we're going to be retesting the January lows. But again, kind of like the dollar index right now, I'm not making any big calls on the 10-year notes because we had a nice rally off the lows. We're coming back to retest that. It could end up just being that. I don't really see an edge from a trading perspective in notes right here. Mainly focusing on FX as where I'm seeing more of a clearly defined edge.
Got it. Okay. So for FX, you're looking for higher levels in the euro versus USD, lower levels for USD JPY. And then as far as the stock market goes, Dave, to kind of shift gears for the S&P, what do you make of these slight maybe cracks that showed up this week? I mean, the first red we've seen in a long time, not much of it and short-lived. Does it mean anything to you?
It does actually. We're in a very tight range here again, at least this week. And again, I'm talking in terms from a trader's perspective. We've got to get above this 39.11 or below 38.90 in some meaningful way in order to engage a little bit more momentum. Like you said, we did crack lower. We ripped them right back up, which has been the case time and time again. At some point, it will be healthy for the market to move a little bit lower to kind of reset the game, so to speak. Like I tell clients all the time, as we keep making new highs, there's really nothing to work with from a technical perspective. You either believe in the rally, you latch on and you let it go. But if we can get some sort of a pullback, then we've got some previous historical price action to work with. So right now, my focus is getting a break of that range. If we can get a close today above 39.10 and even ideally above 39.20, which is basically the intraday high, that would be encouraging for the bulls. Doesn't mean that they can't come back and light them up next week if we don't close above there. I personally would favor a little bit of a break lower. I'd like to see prices settle below 38.91 on the close, because I just think that's going to offer up some more robust trading opportunities, maybe get the VIX to kick up a little bit, push prices a little bit lower, and that gives guys like myself who who are more short-term oriented, just a little bit more to work with on the technical basis.
Pretty interesting, Dave. So it seems like you are waiting for direction here, that this is, not a sure thing that we keep ramping higher. I mean, that's where the bias is, right? That's where the momentum has been, but it seems like you're still leaving some room for potential breakdown in your view of the market.
I think there is. Again, what that catalyst might be, that's unknowable. I do know that this week, from a trading perspective in the S&Ps, it was challenging because it was a very tight range, a lot of back and forth, and you might say that creates a lot of opportunities. But if it's within a fairly tightly defined range, it's actually not good. You want something that's trending, be it up or down.
Okay. So Dave, what becomes interesting if we do start to, stop making new highs consecutively? I mean, is this like a rate of change thing where you want to look to see if the rate of our progress in the stock market slows down? Are there sectors that you think are the most important kind of tells to look for right now?
Well, I think ultimately the trend, again, I've said this for months coming on here, the trend remains up. The dips are bought until that changes. That needs to be the underlying narrative. So yeah, we might get a couple of pullbacks along the way, but one of the things I sent over to you today was some quantitative data on semiconductor stocks. Basically it's pretty straightforward. I might have to read from my cue cards here because it's a lot of information, but basically the semiconductor stocks put in a new rate of, let me just read it so I don't screw it up here. They're up 5% in terms of the weekly rate of change, and that's the first time that's happened in 6 months. Now, historically, that's happened, or when that's happened, it's happened about 10 times over about a 15-year look-back period. So when the rate of change has been plus 5% for the first time in 6 months, the forward returns on the semiconductor index, both on a 3-month and 6-month basis, is basically 10 and 20% respectively. Only one of those times did the prices actually move lower. So it kind of makes sense. We're in a bull market. Semiconductor stocks are hot. There's chip shortages, et cetera, et cetera. Then we have that piece of quantitative data to overlay on top of it. The chart looks bullish. So if you've got a slightly longer time frame, say 3 to 6 months, those are some pretty robust returns. 9 or 10 and 20% respectively.
Okay. I like that context, Dave, for semis on this major breakout week. It certainly is one that stands out. You've got NVIDIA breaking out as well, so the targets here that you've got are pretty solid. I mean, it looks like you were prepared to ride this breakout pretty far. I mean, SMH right now at 253, and you're looking at moves that could be, what, 20% higher from here? Exactly.
I mean, on the SOX, SOXX, 3-month target based on the historical returns when these similar rate of changes have occurred. We're looking at a price target of 477, 6-month price target up towards $523. Again, using historical patterns, assuming that we get the same, reaction this time, that's what we could expect on the upside. Naturally, you're going to want to map those along the way if you decide to latch onto those. Keep an eye on the technicals, keep an eye on the market at large, but that's the underlying bull case.
All right, Dave, always love to hear the analysis. Appreciate the specific targets and the views. Thanks as always, Mr. Floyd, founder and president.
Hey, my pleasure, Oliver. Have a great weekend.
Thanks a lot, you too, at the Aspen Trading Crew.